This may come as a big surprise to a lot of you, but I do not invest in single tenant net lease commercial properties. Now, one caveat, I am actually under contract to buy a single tenant net lease property, but it's the first one we've ever done, and it's because I know the operator and we're able to buy it at such an attractive cap rate that it's almost impossible to say no. But I traditionally don't buy single tenant net leases, and that may seem crazy again because at the brokerage, at the Cobble Group, which is where I started off selling single tenant net lease deals to investors. We actually have quite a few investors that we sell these projects to, and they make great investments, right? There's nothing wrong with single tenant net lease investments. I just don't do it, and I'll explain to you guys why. And we're underwriting single tenant net leases on this channel all the time. You can watch us do that live. And we actually have a single tenant net lease spreadsheet, check that out here, which is awesome for underwriting those kinds of opportunities. But I was asked to speak at a buddy's mastermind, I guess earlier this week. And I got asked that question. Do you invest in single tenant net lease properties? Which really got me thinking maybe I should actually do a video and explain to you guys what my thoughts are on STNLs, which, you know, that's the cool term for single tenant net leases. That's what all the cool kids are saying. STNLs and why, I guess what my investment philosophy is when it comes to them. So here we go. First, let's talk about what a single tenant net lease is and what it isn't, because I feel like even though it seems really straightforward as to what it is, a lot of people don't know. But a single tenant net lease is a single tenant net lease building. All right, let's break that down. So single tenant, there's only one tenant in the building. It is not a multi-tenant situation. And because it is a single tenant, you have the ability to have an absolute net lease on the property, which means that the tenant is fully responsible for maintaining everything to do with that property, which actually makes it a very attractive investment for a lot of investors. Think about that. If you're able to go buy a property and the tenant is responsible for everything, you're never gonna get phone calls as an investor of, hey, you know, the roof is leaking, come fix it. Or, hey, the lawn guys didn't show up and the grass is overgrown. You don't have to worry about any of that. And one of the beauties of that is that you can buy single tenant net leases across the country. You can buy them anywhere in the world because you don't necessarily have to be there to oversee the property. Now, while I do always recommend that you at least have some sort of asset management plan in place, whether that's you going out and keeping an eye on the property once a month, once a quarter, whatever, or you're hiring an asset manager and paying them to do that, which is often worth it, you gotta keep eyes on the building. But other than that, it is mailbox money. I mean, that is mailbox money real estate. An absolute net lease is very similar to a triple net lease, where in a triple net lease, the tenant is responsible for their portion of the common area maintenance, the property taxes, and the building insurance. Well, since it's a single tenant, they pay 100% of everything. And again, you add that absolute part on top of it, and they cover all aspects of the property. You have no landlord responsibilities whatsoever. So for those reasons and many others, obviously single tenant net leases are a very attractive investment. So, I mean, I'm not investing in them because I don't think they're attractive. They're just not quite to the level of appreciation or returns that I would like to see for myself at this point in my career. Take my sunglasses off because I didn't realize I still had those on. When you're first getting started in real estate, single tenant net leases are really designed to help you preserve and slowly grow your capital. I look at them almost like bonds, right? If you're investing in bonds, it's more of a preservation of capital strategy. You're gonna get a very low return on your capital, but it is a very safe, risk-free investment. Very similar to single tenant net lease properties. You're typically buying a property that has a very high credit tenant in there. So think of Walgreens or Arby's or Hardee's or any of these fast food concepts that doesn't necessarily own their own real estate. Could even be a Dollar General or a Walmart. We've seen all sorts of different single tenant net lease opportunities come across our desk. And with these national corporations, you're getting a pretty well guaranteed lease, right? Because the thing about STNLs is you're really buying the income. You're not necessarily paying what the property is worth, right? Because if you look at a price per square foot basis of some of these transactions for net leases, and it makes no sense in the world because you're paying $600, $700, $800 per square foot sometimes. Well, it's not based on the value of the building. It's based on the value of the lease. And so that's why you're buying these high credit tenants, because they have the ability to back up and pay that. Because at the end of the day, a lease is only as strong as the group that is guaranteeing it. So keep that in mind if you are going to be investing in single tenant net leases. A lot of our clients that are investing in single tenant net leases have grown their portfolio over the years and are selling some portion of that portfolio and looking to avoid capital gains tax. Well, if you've all of a sudden got $2 million or $3 million in cash and you don't want to pay 20% in capital gains tax on that, you could 1031 exchange it into a single tenant net lease. Your risk is very low, all things considered for commercial real estate, of course, and it's mailbox money. So you can go focus on other things. A lot of our clients will do that. They'll 1031 exchange into these single tenant deals. And at that point, like I said, it's more of a preservation of capital tactic for them. Since these tenants that are paying these rents are high credit and the returns are basically guaranteed, that means that the risk is lower, of course, like I said, which means that the payout is going to be lower. You're just not going to get as high of a return on your capital since it's going to be a very desirable investment, right? Just about any group will want to buy that if they just want to park capital for a little bit. So in real estate, your risks and your returns are directly proportionate. As the risk goes up, your return should go up. As the risk goes down, your return should go down. So that's one of the big reasons as to why I don't do it. I just can't get the level of value out of these projects that I can in a heavy value add or a ground up development like we do. Now, obviously, I'm signing on a lot more debt. We don't have corporate guarantees, and these projects take 1, 2, 3 years sometimes to come to completion, and there's any number of things that could go wrong in the meantime. We could have construction delays. We could have a tenant go out of business. We could have somebody default on their lease. There are so many things that could happen, but we're typically looking at much higher returns, which makes it far more attractive for me because I'm trying to build my portfolio now and I'm young, right? I don't have a family. I don't have dependents. I can go live on my grandparents' couch if I have to at the end of the day. So I'm willing to take that risk now and then maybe slow play it a little later on. So that's why I don't invest in single tenant net lease properties. It's, again, not because I don't think they're attractive. It's not because it's not a great investment when it comes to commercial real estate. It's just that in terms of the returns that you can get for a commercial real estate investment, it's on the lower end of the scale just because it is so de-risked. Now, there are opportunities in the single tenant world where you can come in and do more of a heavy value add, right? You could go find a totally vacant building and drop a bunch of money into it, improve that, lease it up, and then sell that on a cap rate. But really, that's kind of a different side of the commercial real estate investing world, and you're basically on my side of the table at that point, and not necessarily buying on a cap rate basis. I always like to buy on a price per square foot basis or a price per dirt basis, and then sell on a cap rate basis. It's one of the beautiful things about commercial real estate. You can actually get in and force returns just by increasing your NOI a little bit, whether that's through lowering your expenses or raising rents. And often single tenant net leases have longer term leases. They're 7 to 10 years to 15 years or 20 years. And sometimes they'll have 3 5-year options or however many. I saw one time that had 7 5-year options. It was crazy. So that tenant can be there for a very long time without the rent ever really increasing, at least substantially, right? I mean, they'll always have some sort of increase, but yeah, so that's it. That's why I don't invest in single tenant net lease properties. That will probably change at some point as I decide to de-risk my portfolio. But for now and for the foreseeable future, I'm gonna keep to it with these heavy value add and ground up development projects. So stay tuned for more videos on those.